Good morning, everyone. I hope everyone has had a fantastic trading day. If you can hear me, just comment on the chat section while I set up. So if you can hear me clearly, just comment on the chat section. Okay. Just say hi on the chat section. Hi, Jack. Hi, Gift. Hi, Kevin. Okay. So, morning, Joseph. Daily trends. Good morning, everyone. Okay. So you're going to look at the fundamentals as usual, tie it to our technicals, and then we see where we're going to go next week. Yeah, and I hope even as you're doing the analysis, it's also a learning opportunity to know how to connect fundamentals with the charts, because I feel like mostly that's usually somewhat of an issue. How do you translate the fundamentals to the charts? So as we're doing the analysis also, I hope you're learning one or two things with regards to the same. So I'll just do a recap for last week, and then, so I'll take this over here. I'll do a recap for what we discussed last week fundamentally, and then switch over to the charts, and then I will come back to the fundamentals for this week, and then talk about what to expect. Hi everyone, Alexander, Benjamin. Yeah, thanks guys for attending. Okay, so I have 3 reports. This one we looked at on 7th of July, 2 Fridays ago. This one we looked at it last Friday, and this one we looked at. This one is what we're going to look at this week. Yeah, so if you're interested in getting these PDF files, you can also just contact through the socials. Okay, so I'm just going to start from last Friday, where we were talking about. So last week we had a stream of data from the US, CPI, PPI, and most of it affected the dollar negatively. So if you look at the charts, so let me just go back to this chart here. If you look at this chart, we saw that we had this push. So this was the entire of last week. This is a H4. So last week we had this push in EURUSD. We had a similar move in GU. We had a similar move in USD CAD. USD CAD now is downwards, which is the opposite. This move over here. Then we had a similar move in pretty much most of the major currencies. We had that push downwards, and we talked about waiting for pullbacks before getting in long. So the sentiment last week, we talked about, yes, the dollar might be weak, but at the moment, it's looking very expensive. Like Euro, for example, was looking very expensive. We had this move, and we talked about during this arrow where we were saying wait for a pullback first, and the pullback indeed has happened this week. So we have this move over here. This was the whole of this week. Yeah, we have this move. So again, mark your key levels, and then that's where you wait to see more data with regards to what happened or what's going to happen. So I had this pullback in EURUSD. This is now the entire of this week. Remember, this up move was last week alone. When you look at GU, same story. We had this push, and we talked about waiting for a pullback. In this case, it pulled back to the areas we had marked last week. The first area was at the 50 level, and now it's pulling back to this major area over here. Again, so when you're looking to trade, it's usually prudent to not just price. And at the moment, if the data supports it, then we might get a continuation back up. If the data supports, and we're going to talk about that in the fundamentals, but clearly our pullback looks like it's completing in most of these pairs, especially for Canadian US dollar. Remember, we drew this arrow. So these charts are the way they were last week. We said we need to wait for this move here to complete. So we had this, so this is Friday, Thursday, Wednesday, Tuesday, Monday. So yeah, this was Friday last week during the session. So we said, because dollar has dropped so much, it's not prudent to want to follow the price downwards. Wait for a proper pullback. And indeed that happened. Actually, it happened the same day, Friday, later in the day. And then that's when you saw our continuation downwards. But at the moment, fundamentals we need to be careful with them before we conclude that the trend is going lower. So we'll talk about that in a few. And then the other one you talked about is USD JPY. Same story, basically. So if I go to H4, had this push, we marked this level, and it seems as though we're getting to that level. However, they're quite, there's a number of things you need to know about what happened yesterday, and we'll get into that and why we had such a sharp move yesterday evening. So we're going to explain that in a few. But then again, we had this push the whole of last week. This week we are recovering from that move. Now it's time to see where you're going to go next. Okay, so I think for those who are joining us and for those who are watching for the first time, you can go refer to the previous video and how we analyzed it. Then you can join in on this one also. Okay, so let's go back to the fundamentals and discuss what exactly happened. Let's share it. Yeah, share. Okay, so this was last week. PPI, CPI, everything was against the dollar, and that's why we had the push. This week we had the pullback. So what do we expect this week? So first things first, the headline is dollar bears being asked for patience. So basically we're expecting the market to be rather quiet because next week we have a couple of meetings, and we'll get into that as we scroll down on this chart. So quiet summer markets are seeing dollar pairs consolidate in new, slightly lower ranges. So the thinking is that pullback might not necessarily mean it's a pullback and then the trend will continue. So we need to be careful with that. Dollar bears may find some reassurance from emerging markets where the People's Bank of China is trying to limit USD Chinese yuan movement. Again, let's talk about that. So actually, let's just jump into that right now. Okay, let's start with the dollar. Two things to note is number one, yields here. So in fact, you could argue that the dollar should be even slightly higher. US yield have retraced about 50%. Yeah. Remember our lesson about yields and how you use yields to gauge the strength of the dollar, because yields track interest rates at the end of the day. So if you just look at where the yields are, so 2-year yields, 1-year yields are usually the best to do this sort of analysis. And last week we had yields retracting. So whenever yields are going lower, it means the market is pricing lower interests, and that means a weaker dollar. Whenever yields are going higher, it means the market is pricing higher interests, and hence also you expect a stronger dollar. So we had this pullback on the yields. This is the daily chart. Seems as though the yields have retraced half of this move, this down move. They've retraced half of it. Do we think you're going to go higher? Not necessarily. That means we don't expect a stronger dollar as of yet from the information that's coming out from you. Again, it's a good gauge when you're looking at where to price the dollar. Yeah. So let's just continue with this. Yeah. And if you have any questions, you can just keep them coming. So price action over the past week probably shows that there's a switch to the disinflationary trade will not be easy. Yeah. So the thinking that, okay, PPI went down the previous week, CPI went down the previous week. Does that mean that we'll have the dollar weakening immediately? So the assumption is it might not be as straightforward as we initially had thought. Basically, that's what the article is saying. But if you look at the charts from all this, just a minute. Yeah, sorry about that. Okay, so we are saying that there's some hope that the dollar might be a bit strong, but it depends on how next week goes. And if we jump right into next week, here we go. So when you look at Japan, they have a meeting next week, the Bank of Japan. When you look at Japan, there is the sentiment that things are going on well for them. They might not adjust their policy. Their policy is to control the yield curve, which in turn affects the Japanese yen. So yeah, today's session should be quiet. These guys are expected to be meeting next week. So we have the Bank of Japan, European Central Bank. Then they're saying regarding the Bank of Japan's expectation, the yield curve is at this, yeah, 50 basis points and 55 basis points. Remember the work of the Bank of Japan, in comparison to other central banks, their work is to just keep their 10-year at 50 basis points. And at the moment, that's the case. The yield curve is already at, the yield for the 10-year bond is already at 10%, 50%, sorry, 0.5%. So there is not really any sentiment that they might change their policy anytime. And that means the Japanese yen might see some slight weakening. That's why I'm on this Japanese chart at the moment, this USD JPY chart over here. Over here. So if you look at it, on the daily, we had this push downwards, and now we have this move. Yeah. So we can argue that this is the start of a new trend, both on the 4-hour and the H4 time frame, as long as the meeting hasn't happened yet next week. So we can argue that we should imagine this as a continuation or a trend that might continue going higher for the shorter time frame, way up to until when the meeting occurs. So it's a good play, especially if now for this move we wait for pullbacks and then we see how to go from there. One more thing though, and this can be explained properly with the next currency. So if you go back to this, so here they're saying USD JPY may well drift into 141, 142. So those are key areas for you to look for. If it drops below 141 or 142, then it's a good opportunity, a good area to look for buying setups. So if I go back to this chart, where is it? Yeah, if I go back to this chart over here, so these are levels we marked last week. We're expecting the pullbacks to go up until these regions. But if they've said 141, which is around here, yeah, so where it was initially, and then we have so let me just use a rectangle instead. So I can get rid of this now and then use a rectangle instead. Yeah, so around this region, if we see which obviously it's going to drop because there's this huge imbalance, and we're going to talk about what happened yesterday. There's this huge imbalance with this candle. So if you see a pullback, we should look for a healthy move back into this region. So anytime USD drops to any of these levels, if fundamentals stay the same, then you can be looking for areas or opportunities to buy back into this region, because you're looking to play within that range at the moment. Alternatively, which is very unlikely, if the situation in the US continues to prove that there is weaker data coming in, and the narrative that we are still going to see weaker US data, then that's when you can make a case that this is a pullback and then it's a continuation downwards. So I'm hoping you're getting the difference between the two. If you have questions on that, you can ask for clarification. But let's look at what happened yesterday, and Euro can explain that. So let me just adjust my phone. Okay. So I hope USD is properly explained. At the moment, we'll explain what that is, what is happening at the moment. But this move, once it clears, then you'll expect a slight reversal. And if what we are thinking about the Bank of Japan is true next week, then that reversal will come again up to another move higher. But alternatively, if we start seeing weaker data from the US, especially next week, then our target should be lower. Okay, so let's talk about yesterday's push. I'm sure if you're looking at the markets yesterday, we had such a weird move on the dollar, basically. That was Euro USD, USD JPY, and most of these pairs. We had a sudden weakness in sudden strength in the dollar. And this is the explanation what happened yesterday. So we had this push upwards. So let me go back to the hourly. Towards the evening, we had this push upwards with USD JPY. If you look at Euro USD, we had this sudden move lower. It was very sudden. If you look at GU, same story. We had this move on the H1 time frame. So this was yesterday. We had this move lower, but it was very profound on Euro USD and USD JPY. So let me explain what happened with regards to that. So usually, with regards to the two, one thing you need to look at is there are different participants in the FX market. So people are not only trading spot prices. Spot prices is what you and me are doing right now with USD JPY trading on MT4. It's the current price. But we usually have an options market that operates hand in hand with the spots market, the spot price markets, and mainly it's institutional. So a lot of the times you'll find institutions preferring options to spot markets. And yesterday what we had was at 16 CET, this is Central European time, which is 5 o'clock local time. We had quite a big chunk of options expiring at that time. So even before we continue further with this, if you want to check where option prices are or the orders for options, simply go to Forex Live. You can just go to Forex Live real quick. And then /orders. So forexlive.com/orders. You'll find a list of options expiring. So an options contract is simply an agreement between two institutions to execute a trade, either a buy or a sell, at a predetermined price at a predetermined time. Yeah. So one institution ends up losing big, the other institution ends up gaining at exactly that time, either before or exactly that time. So if you look at the orders for yesterday, so this is FX option expiries for 20th of July, which was yesterday. Before you even look at for today, which is the same here. So you just come, this guy always updates option prices. So if you check close, we had quite a number of huge orders expiring at certain prices. So at 1.190 to 1.11, we had about 1.3, and we had about 1.5 billion euros worth of option expiring at that time. Same thing with USD JPY. You had 2.1 billion dollars worth of options expiring at 5 o'clock yesterday. So that's one thing you need to notice. Sometimes 5 o'clock, usually you have very sudden movements, and this explains it. So we had these two contracts. Usually it's an aggregate of different institutions, but they were expiring at 5 o'clock yesterday. So if you look at the charts, this is something I need you to note. If you look at the chart, let's start with, so you can mark here 140 for USD JPY. If you go back to the charts and you see what happened yesterday. Yeah, so let me zoom in. Right before 5 o'clock. So this, we have marked this green line. I think I should change the color. So we have marked this vertical line here, 1700. This was right before 5. We had prices shoot up past 140. Yeah. So sometimes these levels, prices tend to be attracted to or away from these areas where huge orders are expiring. So either an institution is in the money or out of the money by the time price is clocking at this point. So remember, for one institution to make money, prices have to be at this price at before that time. And that's why you had this push upwards and probably still have the market thinking we're going higher at the moment. Yeah. So that's one thing to note. We had this push both USD JPY and even on Euro USD. When you look at 5, that's when you had the largest candle for the day, if I'm not wrong. This one. Yeah, this was exactly, so this was things we drew 2 weeks ago. Let me just remove this. 1 week ago. Yeah, so if you look at yesterday's 5 o'clock candle, we had this push here. Yeah. So those two huge candles, expiration in the options market. So one thing you need to note about options market is you won't be looking at them every day, but for the better part, it's worth once in a while watching or monitoring what's happening. Because there are such large orders in the options market, it's mainly just institutions that are trading. So it's a good way to gauge key levels in the market and things like that. So you can even come and check what's up in the market for today, what options are expiring for 21st of July. If you are if you're attempting to trade this, you'd probably also use them as a source for key levels. So if I expand this, I can see that it's only USD CAD where we have options contracts or orders worth 1.1 billion that are pending, expiring today, 5 o'clock. So prices might be attracted to that level or away from that level. So that's something you need to watch out for today. We rarely speak about it because it's usually market dynamics, and sometimes other factors can come in play that outweigh these orders, for example, news and other things. So, but because if you have a quiet day like yesterday and today, then they might take more precedence. Okay, so having said that, let's go back to this article here. Okay, so at 16 CT, 16 Central European time, which is 5 o'clock our time, options are expiring. And most of these contracts here, they're saying, so this is nothing, you don't really have to cram this, but they're saying a delta of 25 call options. So usually when options are in the money, they're around 50. And it seems as though a lot of guys who are anticipating to buy Euro USD are out of the money, and puts or guys who are selling or are short were in control yesterday. So back to today, Euro USD could drift down to this level. Yeah. And it's looking highly likely considering our move hasn't yet completed. The pullback isn't yet over. So if you go back to this chart here, so if I go back to the larger time frame, you see we still have quite a huge distance to go through. Yeah, there's a lot of imbalance and levels that we'd want to see cleared first. So in a scenario where we have Euro USD going higher like that, I'd still expect us to at least clear this level sometime. If not next week, then we just need to clear this level first. Yeah. So if we don't, even if it's not this week, that is, but my play will probably be looking to see if we can take this lower back to this level over here. So they're saying Euro USD will drift down to support at 111. So 111 is, let's see where 111 is. Yeah, somewhere here at the 50% level. Yeah, at the 50% level of your Fibonacci. That's where 111 is. So it's looking like a likely point where we might see a reversal first. If we go higher, fine. But this is a key level that you need to watch out for. If we break this, then we're probably going to clear all this over here before thinking of going higher. Okay, so the play is pretty much the same for most of these. Let's look at okay, just a minute. Let's look at data for next week to see what we should expect. Okay, so let me change the screen. Okay, so this is next week. On Monday, we have data from the Eurozone. So Now, when you're interpreting some of this lesser known or less impact news, because the high impact news is usually just inflation, employment, and interest rates. Anything else needs to be in line with the general theme of the market. For example, if we have the market thinking that euro is supposed to be stronger, and then we have, let me call it small, economic data that is in line with that consensus, then that's going to boost the euro. If it's not in line with that consensus, it's going to have a smaller effect on the market than it should have. So that's one thing you need to look at. So whenever you're interpreting this, you need to know what's the general context. At the moment, you seem to think euro should be slightly higher, dollar should be slightly weaker. So that means if this data, the flash services comes in slightly stronger, then it should build onto that narrative positively. However, if it comes in negatively, chances are we might not see a huge impact on the market, because the general theme is we expect that deflationary narrative in the US to continue. So you have that. We have CPI from Australia. We have this. So main event for the week is FOMC statement. The market is expecting one more hike, 5.5. So this wouldn't be a surprise. If the Fed hikes to 5.5, that shouldn't be news. News is, are they going to do it again? Yeah. So the market is less interested in this. It's more interested in the press conference, which happens afterwards. So that's one thing you need to note. What are they going to say that's going to provide direction going forward? And if there is major news like this, and that's what you're saying, we expect the market to range a bit for next week, then Monday, Tuesday should be ranging days for USD. So that's one thing you need to take note of. That means don't expect quite a huge move in any of these pairs until you have the way forward. Usually that's the case, unless the market is very sure about where the data is supposed to take us. In this case, it's not, the market is not very sure because you had mixed data. On one end, we have the Fed saying we need to tighten. On the other end, the data that's coming out is very weak. So it's not supporting that narrative per se. So we might see the market ranging for at least for Monday and Tuesday before we have a clear direction afterwards. So that's for the FOMC. Remember, it's the press conference that is important. And the statement. Okay. And then we have the following day for euro. Again, so usually how you play these two, MPC, sorry, the Fed and the euro is you look at divergence. That is, you look at if the euro, between the ECB and the Fed, who is likely going to stay bullish for longer. Sorry, not bullish, but who is likely going to keep rates high for longer. So if you, for example, find that the minutes come in and they're seeing the data and they're seeing improvement in the market, that means that's a weak dollar. Yeah, because they're likely going to pause on interest rates. And then if the ECB comes in and say there's still high inflation and things are not looking good, that's a strong euro. So that might really be a very good opportunity to be very bullish on euro USD, for example. And this pullback might start making sense here. So if I go back to this pullback here, so you've had this push upwards and then this pullback. And then if we see difference in the policy measures, that is, if the ECB comes out with a very strong message that the economy is still weak, and the euro and the Fed comes in and says things are looking good, then we might see we might see larger upside for the dollar. So we might look into breaking this channel that we had drawn, possibly higher. So that's one play you can look, you can watch out for next week. So it might break out of this range eventually and reach 1.13. That's if we have a divergence between what the ECB is saying and what the Fed is saying. That is, if the Fed is looking towards pausing and the ECB is still on that trajectory of hiking rates, then definitely we're going to 1.3 and above. Okay. I think that's it for this for next week. There is the BOJ on Friday, of course. We've already talked about that. We don't expect any change from them. Okay, so I think that's it. Let's look at the questions. Let's see what else you guys are looking at, watching. Yeah, so we had the pullbacks that we talked about last week. They've happened this week. So now let's see where the market is going to go with regards to especially comments from central banks next week. Okay, so let's go through these questions. What do you expect on USD JPY? Yeah, so for USD JPY, fundamentally, we don't expect the BOJ to say anything different. We don't expect things to change with the BOJ. However, we'll be keen on seeing what the Fed is going to say. Yeah, and they've never changed the tone. They're always saying they're going to hike rates. So that's probably going to make USD JPY bullish for today and Monday and Tuesday until it's clear on Wednesday. Bullish or slightly bullish. So if you don't have a very strong trend upwards, it's going to be a weak trend upwards. So things like this here, we know this was yesterday with the options market, but if you wait for pullback here, you can look to see if you can find opportunities to buy along this area over here, unless something drastically changes. So you might see this and go back higher. The battle fundamental analysis is not simple. Some theories claim that TA is superior since fundamental analysis is already incorporated. So that's partly true. When you're doing fundamental analysis, you're looking at expectations, and expectations always change. That's one thing. Number two, it's not okay. So when you have news happening, the market doesn't instantly price that in. Sometimes it takes longer. For example, when you had, let's look at this chart. When you had the previous time, the Bank of Japan came in at this point, yeah, and they say they're going to intervene in the markets. You see this drop, we didn't just gap all the way to, I don't know, 1.27. It wasn't a gap. It took a few days for us to come back down. So usually fundamentals take time to be priced into the market. It's never instant. Okay. Please share the site where you're reading. Okay. For the site, usually you can use Forex Live, you can use Forex Factory. The one I use mainly is, they do a lot of thorough economic analysis, and I usually prefer that when doing fundamentals. So it's called ING. Yeah, this is the one. So thinking.com, think.ing.com. They have a lot of thorough analysis, and you can download PDFs from them anytime. Please share social handles. So my social handles are Twitter, Samson Mzera. I think that's the only place I'm active. So you can just reach out to me over there. Is it right to trade for the news, or is it better to wait for the news? Okay, so that's a question we get a lot. So when you're trading news, it's not necessarily about just going to the Forex Factory calendar and then reading the expectation and the forecast and then placing a trade. It happens in a number of ways. The first one is you can trade before the news. So you can trade market expectations. For example, this week we expect next week that the Fed might be a bit hawkish. For example, people will start buying dollar right now. Yeah, if I use this example a lot, if I expect a road to be built somewhere, the prices of land in that section will start rising now, not when that road is announced. So you can trade based on expectations. You can also trade during the news, which is very common, or you can trade after the news because the market takes time to price in the information. So it depends on your style, your strategy. So the first question is how central banks are hearing the it's time to start looking at other factors. Yeah, that's true. That's true. First, we need a clear direction as to when they exactly stop pausing. And then from there, now things become a bit tricky. So the past 2 years, we've enjoyed, I'd say, somewhat easy interpretation of fundamentals onto technicals, because it was just tightening. And it was loose policy, and then they started tightening. So it was very straightforward. Going forward, however, you're right, we have to be very careful with how we interpret fundamentals and the Fed. So things are going to shift, especially even with stocks. Like right now, it's very easy to say why stocks are going up. So we know why stocks are going up, because we expect probably this is going to be the last hike or something like that. But once that is done, then it's going to be a bit tricky, because now you have to look at unique fundamentals for each company and see where that is going and how it ties to the index and things like that. But we'll cross that bridge when we get there. What's the perspective on gold? Same story. We had this push upwards last week. Now we're coming back to this pullback over here. So we had market levels. Look at this one. Nice, this one. Yeah. Okay. So yeah, so we're seeing pullback here for gold, the 4-hour time frame. We know why this pullback is happening. Dollar has been stronger this week. So I'd want to see, at the moment where we are, I'd want to look for buying opportunities, or worst case scenario, I'd want to look for buying opportunities where this huge selling candle started, and then we had this upwards push. So I'd want to look for buying opportunities either here or here, if at all you're going to get them. If we pass this range, then my sentiment will change, but I have to confirm with the data. What's your view on oil? Oil is very quiet at the moment. I don't think we have a lot that's happening. Oil market. Yeah, the last time we plotted, we had this triangle formation. So seems it's very quiet, but we can check on oil. Okay, so let me just change my screen. Oh, we're already on screen. Oh, I've been talking on a different screen. Okay, let me just recap what I've said before we continue. We've said for the first question was on what? USD JPY. Yeah. Okay, we've talked about this. We're looking bullish at the moment. Also, next week, we're not looking at what the Bank of Japan is saying. We're more focused on what the Fed is going to say. So you might have a bullish trend on this one. So just wait for a pullback and then see whether you can go long again. The alternative is, unless you break 137, that's when you start looking for shorting opportunities. Then the other question was, I think we've discussed some of these questions. For gold, same thing. Yeah, there was a question on gold. Yeah, we seem to be coming back lower. However, still bullish, still looking bullish. So you might want to see the market either resting here or somewhere here where it is at the moment, and then you start looking for buying opportunities. For selling opportunities, wait for the market to pass this level, at least, because this is where we know demand started. So if there is no more demand at this point, then now you can start looking for selling opportunities once we've cleared this area. But I'd recommend at the moment, we just see, we do our analysis, of course, and see whether you can find any buying opportunities at the current point or slightly lower. Again, if it fails as a buy, just wait for it to come way down here, which is very unlikely for it to reach this point over here. And then we've talked about oil. You said it's quiet, but let's look at this. So let me just share. I'm going to change my screen again. So thinking is because the dollar is looking a bit strong because of next week, then okay, for this one, I've not done thorough analysis on this, but I'd say we should be in a range. I don't think there's enough reason for the dollar to be that bullish till we have a clear path from Wednesday. So even the items that we're looking to go long, things like that, shouldn't be such a strong trend unless there's something out of the ordinary that happens. Okay, having said that, I think that's it with the session. Speaking of stocks, do you think Taiwan's a manufacturing company? Maybe we can have a session on stocks because I've not quite looked at them, unless we look at them and then we share them the following week. So I think I'd want to. Then there's another question I think we did on also with the crypto. Someone had asked something on crypto last week and I forgot to answer. So I think for next week's session, Norbert will be covering it. I'll inform him to look at the semiconductor and generally the AI industry, and also stocks in general. Okay, having said that, thanks for attending the session. It was an interesting one. I hope you've learned. You can always rewind this video. We've talked about options markets. We've talked about expectations. We've talked about the yield curve. We've looked at various assets. And yeah, and I'm hoping the information is useful. If you have any questions, you can reach out through the FXPesa socials. If you want to reach out to me personally, I'm only active on Twitter, social media. So you can reach out to me there, and yeah, have a lovely trading week. See you next Friday. I won't be in, so the other Friday for next month. So see you then. Have a lovely trading